When thinking of investing in precious metals, gold may be the first thing that comes to mind. Although silver investing sometimes gets hidden behind gold's shine, that doesn't necessarily make it less sparkly. That's because even though silver historically trades at a lower value than the yellow metal, its value generally tends to be more volatile. Because it can conduct electricity and doesn't corrode like other metals, silver is used in a number of industries, including solar energy and in batteries for personal computers and electric vehicles. So, the growing demand from solar energy products may have helped silver gain popularity as an investment. Looking at a chart of silver futures versus gold futures, the two metals appear to move in sync for the most part, although there are times when they outperform each other. The allure of precious metals. Why all the interest in precious metals? There are several factors that may attract investors. 1. Physical demand. 1 reason investors have been drawn to precious metals is the potential of significant physical demand growth, driven in particular by consumers in China and India. 2. Flight to safety. 2. Global events, such as virus outbreaks, politics, and trade wars, could give rise to uncertainty in the global equity markets. 2. This may drive investors to assets like precious metals because they're often thought to retain their value, although past performance does not guarantee future results. 3. Interest rates. 3. Low interest rates could increase the appeal of precious metals to some investors. How to invest in silver? If investors are considering adding silver to their portfolio, there are different ways to go about it. If you're interested in silver investing but aren't sure where to start, consider using screeners. Here are 2 ways. 1. Screening for stocks. After logging into your TD Ameritrade account, under the Research and Ideas tab, select Screeners, Stocks. 1. Next, select the Create a Screen tab. 1. Then under Sector, Industry and Sub-Industry, select Materials, Metals and Mining, Silver. 2. Screening for silver ETFs, ETNs, and other ETPs. To screen for potential ETFs, under the Research and Ideas tab, select Screeners greater than ETFs. 2. Select the Create a Screen tab and under Overview, select Morningstar category and then select Commodities, Precious Metals or Equities, Precious Metals. Buy the metal outright. This may be the most straightforward way to invest in silver, but investors may have to pay markups and commissions. They'll also have to think about how to store the metal. Invest in stocks of silver-related companies. Silver mining companies and firms involved in the production, distribution, and use of the metal can be considered silver-related companies. Generally, the profit margins of silver companies are thought to correlate with the price of silver. However, investors should consider other factors, such as geopolitics, corporate governance, energy, and labor costs. It's a good idea to research the different companies before investing in them. Invest in silver exchange-traded products, ETPs. Silver ETPs, such as exchange-traded funds, ETFs, could give investors exposure to silver. But keep in mind, all ETFs aren't alike. They each have a different mix of silver assets, such as the physical metal, futures, options, or other investments that correlate with silver price movement. Trade silver futures and options. This may be an efficient way to participate in the silver market, but it carries substantial risks and may not be suitable for every investor. It's important to know that while both gold and silver have liquid futures and options markets, trading in silver tends to be thinner than that for gold. Silver price moves also tend to be more volatile, so traders should carefully consider position sizing and the potential risks involved when trading a leveraged contract like silver futures. One idea: new or less experienced traders may wish to explore micro silver futures, which at 1,000 ounces per contract are 1/5 the size of the standard silver contract of 5,000 ounces. There are other ways to trade silver as well. More experienced traders might consider a pairs trading strategy using gold and silver. For example, pairs trading allows investors to trade two correlated securities in an attempt to profit on a regression toward, or divergence from, their historical relationship. Risks to consider. Although consumer and investor demand could rise significantly, because of higher market volatility and increasing geopolitical risk, there are a number of potentially offsetting headwinds for precious metals. For example, a strong U.S. economy and U.S. dollar could make precious metals a less attractive investment.